welcome back to the channel. So today I've decided to show you my trading 212 ISA account, what it currently stands at. And as you can see here, the portfolio is currently down 23.5%, minus 2,400. Total invested 10,200. So the value stands at 7,800. Okay, over the past few months it has been getting a bit of traction and kind of clawing that deficit back. I started investing in July of 2019. As you can see there, from July the 1st to August the 1st, I invested £650. So I was buying at like kind of top end valuation prices, and then coronavirus kind of hit, and there we go. Minus 51.68% was my worst percentage down. But as you can see, over the year I've kind of reinvested money and put more in, reinvested dividends, and it's now clawing back to 23.5%. So I'm just going to show you a few of the investments that I've got in here. I do have a pie, actually. I'll show you the pie first. So the pie I only set up a few months ago. I put about £50 a month into the pie, and as you can see, it's doing pretty well. It's 8.6% up, so that's pretty good. Happy with that. Not getting a lot of dividends at the moment because, like I said, it's only been set up a couple of months, but they get automatically reinvested across the board. So if you use trading 212, you'll know that your pie is sort of amalgamated in with your investments as well. So some of these will be my own investments plus what I hold in the pie, because I've utilised the same stocks that I invest in myself. So it's just a lot of dividend paying stocks. Santander, they stopped paying a dividend this year, but they are going to be paying extra shares out, and I've had an email telling me I'm entitled to so many free shares, which I should be getting in the next week or two, which is nice. BP, one of the positions I'm quite down with. It has been a lot worse than this when oil prices really plummeted, but as you can see, it's kind of on the up now. Still paying a dividend, but it was cut in half for this year. Card Factory. Okay, well, we all make mistakes. So I bought this when it was at its like kind of highest really, and it just fell off a cliff. Because of the amount of money I've got in it and the amount of money I stand to lose, I can't bring myself to put more money in. Although I'll probably have to at some point to bring that kind of average price down. It stands, you know, if I put another couple of £100 in there, that's really gonna plummet my average price. Sentiment, gold mining. I like gold. I used to be a gold stacker. Everest is probably one of the better investments as far as dividends are concerned. They pay a really high dividend yield. I just like the company. I've made a lot of money from Everest. Hillian. Okay, so I did make money on Hillian, and I reinvested it quickly where I should have probably held on. So I bought in around $20, $24 a share, and I sold when it got to about $48. Made a lot of money, and then on the way down I decided to buy more, not realizing it had much further to fall. So average price at the moment is $44. I am probably going to try and bring that down and put more money in it, because I do believe in what this company stands for. Other things: Imperial Brands, Investec split. They did a demerger, and I got an £80 dividend, which was what I would have got in the other company's shares. It's just Trading 212 didn't have those shares listed, so they gave me the cash instead. I put that back into the company, and it just doesn't seem to have recovered. But you know, long term, dividends are going to start paying again next year, I believe, so hopefully all's well with that company. Lloyds Banking Group, they've done pretty well over the last month, 3 months or so, clawing back a lot of loss there. That's a 41% increase over 3 months. That's pretty good. But again, you know, I was buying these stocks when they was much higher. I think my cost price on this at one point was about 50 pence a share. So I have bought more. It's one of those shares that if I've got £10 left over after investing, then I'll buy some Lloyd shares, just top it up. Marston's is on my to sell list. I'm pretty much at cost price now. I've got a pending order to sell if it gets to 75 pence a share. They've stopped paying dividend. Not quite as happy with the company anymore, so I'm just going to make some money and get out of it. New River Rate are a good dividend payer, but they stopped paying dividends like pretty much everyone else did. Hopefully that'll be back soon. Royal Dutch Shell, I bought these when the market sort of crashed a while ago. Did have an opportunity to buy more when it went below £10 a share, and I kind of regret not doing that. I should have bought a lot more back then. But I'm in profit, that's good. So again, they pay a dividend which was halved this year, but we'll see. And that pretty much covers everything. You know, a couple of ETFs at the bottom there. Just to round it all off, and that's pretty much my portfolio. I do try to add around £300 a month to the portfolio and £50 a month to the pie. That's the plan. So let's see how it grows. Thanks for watching. Please think about liking and subscribing. Take care now.